Hello, my name is Imran Clark, and welcome to Private Lending and Real Estate with Imran Clark and Daryl Kucan of Kucan & Clark Partners, LLC. Okay, first, a couple of housekeeping items. One, please expand this presentation to full screen so you'll be able to see everything. And two, unless you're actually watching this on your cell phone, please turn off your cell phone and put it away so that you're not distracted and able to enjoy this presentation. Okay, so let me start with a question. What is the number one fear most Americans have? Well, actually, it's not having enough money. And not only for now, but for the future as well. We all worry about our retirement, our future medical expenses. We've got kids that got to go to college. We want vacations and toys we'd like to enjoy later. And we don't want to have to work for someone else at a job until the day we die. We want to be able to relax and enjoy our life, especially by the time we get to retirement. Okay, can you finish the following quote with me? We've all heard this before, right? A penny saved is a penny earned, right? Right. However, a penny saved will never be more than just a penny unless it's also invested somewhere where it can continually make more pennies for you. And private lending is a vehicle you can invest your pennies and your dollars for significantly higher returns. Okay, here's another well-known fact. What is the number one investment vehicle to wealth? Yes, we've all heard it's real estate, and this is still true. So what stops most people from being successful or even trying to invest through real estate for high returns? Well, top of the list are lack of time, lack of experience, and lack of knowledge. Plus, it's a lot of hard work. And the last thing you want right now is even more work and stress in your life, right? So if you already have money somewhere earning pathetic returns, what are your options? Well, what if you could reap the high returns of sound real estate investments without worrying about how much effort, time, or experience you have? Yes, that sounds good, and that's what we're here for. Welcome to Private Lending and Real Estate. Okay, first I need to read you this disclosure. The government is requiring it, so here we go. An investment in real property or companies dealing in real property involves a high degree of risk, including the risk of the loss of an investor's entire investment. Past performance is no guarantee of future results. Nothing contained herein should be deemed to be a prediction of future investment performance. The information provided herein is based on matters as they exist as of the date hereof and not as of any future date. It may not be updated or otherwise revised to reflect information that subsequently becomes available, or circumstances existing or changes occurring after the date of this presentation. Okay, there's your lawyer speak for the day. Now let's meet your sponsors, Daryl Kucan and Imran Clark. That's me. And if you'll bear with me for a moment, I'd like to share a little bit of our story with you. So although we came from separate and different backgrounds, several years ago, we both became committed to making our careers in real estate business and investing. Daryl was always an entrepreneur at heart, and after graduating school, he began working for himself right away. And it was while he was working as the manager of a 524-unit apartment building, Daryl got a look at that owner's profit and loss statements and realized that the owner of his building was making over $1 million per year net without having to put any of his own time or energy into it. Well, Daryl came to realize right there that real estate was the way to wealth. As for myself, Imran Clark, I graduated with a PhD in molecular biology from UCLA, and then I migrated to San Diego, and I worked in the biotech industry of San Diego for 10 years. And I actually had a good six-figure job, and I also had a good 401k plan, but I ran the numbers and realized it would still never amount to enough for me to retire on. I mean, does this scenario sound familiar to you in any way? I bet it does to some of you. So I decided there must be a better way to invest my time and energy, and for me, I came to realize that was real estate too. So long story short, we honed our real estate business and investing skills by associating with and learning from the right people. And we both left our old professions and created an exciting and profitable real estate investment business. And since 2009, we've done well over 500 real estate transactions together. And now our mission is become to be devoted to achieving our mutual financial goals through private lending and real estate development and portfolio building for ourselves and for our investors. We are the principal owners of Kucan and Clark Partners, LLC, and the San Diego Investment Club. So we all ask ourselves from time to time, when I retire, how can I replace my income and still have the lifestyle I want? And we all come up with a similar answer, right? We need to invest. Sure, but what is typically offered to us by our financial advisors and our 401k plans, and what are the average returns we have typically seen from these? Well, let's take a look, shall we? So here are some of the typical investment vehicles offered, right? These look familiar: bond, stocks, we got our savings accounts, mutual funds, CDs, our 401ks, for instance, are investing in mutual funds, currencies, stocks. I mean, these all look familiar. Who here has a IRA or 401k? You got one? I mean, I do. By the way, can you redirect your IRA or 401k to invest directly into real estate for higher returns? Well, most people don't realize this, but yes, you can. And ask us about this later, and we'll point you in the right direction on how to do that. Okay, so now let's look at the typical returns from these typical investment vehicles. So according to Forbes, over time, this is what you typically get from bond, stocks, CDs, and pretty much squat nothing in your savings account. That sucks, right? Well, now throw inflation into the mix, and it sucks even more. And here's an interesting article, kind of sad though, dated October 1st, 2015. It reads, San Diego Pension Fund earns 2.68%. What is the problem with this? Not even the big pension funds are outpacing inflation. And over the long run, it looks even worse. If you listen to and read recent news articles that have talked about the S&P 500 and the other indices, you'll see that they had a net zero gain over almost a 6-year span. That means if you put some money into the stock market, into the stock indices back in 07, 08, and waited it out, first you lost a bunch of money, and then finally it climbs back up to just break even around 2013. A complete waste of 6 years. Might as well just stuff your mattress, probably safer. And actually, it's even worse than that. So if you look further out, for the last 15 years, same problem, total waste of 15 years, yikes. I mean, can we really afford to have our money in these vehicles over the long run? Well, I guess maybe if you're an expert active day trader, which most of us don't have the time for. So that means most of us need to place our precious investment dollars into high yield passive returns somewhere else. But where can we find this? Well, I'll show you in just a moment. And what will happen to you if you do not take control of your financial future now? What will happen if you're not able to find a high yield return for your investments, for your retirement savings? Well, the Department of Health and Human Services has already found out the answer for us. So by the time we're supposed to retire, which they say is 65, and we're supposed to be enjoying the good life, most of us are gonna miss out. Most of us will end up in this big blue section. 54% of us will be dependent on others for help. So dependent on family and government. And then 36% of us will still be working. And it's not because we love what we do, it's because we have to work to make ends meet. Then 5% of us will actually be lucky enough to be dead and not have to worry about it. 4% of us will be financially financially independent is what they call it. But financial independence, according to the government in this chart, is making $35,000 per year. Are you kidding me? I'm here in Southern California, never gonna work. So only 1% of us will actually be wealthy. So what slice of this pie chart do you want to end up in? Obviously a no-brainer, right? And looking at it another way, this chart shows you how much money you'll need to save for retirement if you want to be able to pay yourself $10,000 a month for the next 20 years in your retirement. You'll need to save a total of almost $3.5 million. Now, what happens if you live longer than 20 years in your retirement? your money's all gone. What do you do then? So this begs the question, is there a better way for us to generate income from our investments? Well, of course there is. You already know the wealthy have found a way to get higher returns. So let's invest like the wealthy. Let's take a look. So here's the difference between traditional investments and an alternative vehicle, private lending. And what would you choose? Private lending is like rocket fuel to your retirement investments. In just a few minutes, I'll show you how you can get paid that same $10,000 a month on just $1 million instead of $3.5 million. And then you don't even have to spend your original $1 million away either. You'll still have it to leave to your kids later on. Way better, right? Okay, so here's the part where you really want to start paying attention now. Why is there a bank on every corner? Why do so many huge buildings have a bank's name on it? Well, it's because they make lots of money, right? And they do it lending on real estate, which is one of the safest investments out there. So with private lending, basically, you become like the bank and you lend out your money for a return and your principal is secured by real estate. And the borrower pays you interest monthly or quarterly and then pays back your principal at the end of the term that you guys agreed to, and you release the collateral. In this case, you become an investment partner with Kucan & Clark Partners, Daryl and Imran. You are the passive investor, meaning you provide investment dollars and sit back and collect your quarterly returns. Kucan & Clark are the active investors, meaning that we provide all the expertise and do all the work. We bring the deals, we vet the deals, we take all the time to do it, we provide the collateral, and we secure any additional financial capital that may be required depending on the deal. Okay, so here are just some of the benefits of private lending. Security. So your investment dollars are secured to assets as collateral. They're secured to real estate. And if you look back at, say, that last 15 years in the stock indices, you know, what if you tried to go back to those companies that lost your money? You said, hey, I'd like to take possession of your company and liquidate you so I can recapture my lost investment. Not going to happen, right? But you can do that lending on real estate. Liquidity. It works for long-term and short-term strategies. Transparency. Real estate transactions are a matter of public record. Passive income with potential for high yields. This works for investments of all sizes, small, medium, large. And you can invest in a diverse array of real estate, single-family homes, apartment complexes, commercial buildings, land, notes, so you can invest in paper and mortgages, fix and flip rehabs, new construction. So what do you look for in a private lending opportunity? Well, you want to find manager operators that are experienced, like Kucan & Clark Partners. You want to find operators that have a solid track record like we do. You want to find operators that know how to structure deals. Kucan & Clark Partners, we've done hundreds of deals and so many different types of deals. We've become very good at structuring these things. The proper paperwork. I mean, I've come across situations where people have gone into, you know, loaning a lot of money out on projects and they do it all on a handshake without the proper paperwork. Really a bad idea. We use the proper paperwork. High yields, of course. Safety net. This is important too. So you want to make sure that you're getting into deals where there's an equity position on the buy or created, you know, on a fix and flip. You want to have a good cushion. And if the deal itself doesn't have it, you want to be cross-collateralized to other assets that have equity. You want to have a safety net. Okay, so Kucan & Clark Partners are your experienced operator managers. We've done many, many different strategies, and what we're doing today that works well in today's market is new construction, not only in San Diego, in California, but we're also doing new construction out of state. And then another area that we're really moving into a lot is cash flow rental properties. Obviously not in California. We're doing this in other states, Middle America predominantly, where you get PIGs, passive income generators, real good bread and butter rental properties. And we're building portfolios with our investor partners. This is just an example of a construction project that we're near completion on in North County, San Diego. This is a multi-million-dollar project, 3 houses that will be finished and ready for sale by mid to late spring 2017. And because of what we've accomplished in real estate investing, we've been sought out by newspapers and by radio shows to provide insight from our real estate experience. We also give back to our community through our San Diego Investment Club. Here we provide learning and networking opportunities to anyone who wants to attend. And we have a local expert in our field come each month and educate our members on topics such as buy and holds, foreclosures, note investing, multifamily investing, fix and flips are still popular, and many other topics relating to the business of real estate investing. So here's what you get partnering with Kucan & Clark. First, you get to consistently earn 6 to 12% annually on your investments, and you also get to diversify your investments into real estate. And real estate should be a fundamental asset class that's part of your investment portfolio. And then within real estate, we've got diversification. Right now, we're focused primarily on new construction and cash flow properties, but there are many other real estate investment strategies. Built-in equity. So we like to have at least a 25 to 50% equity position in our deals. Remember that safety net we talked about? There you go. Higher yields, we talked about. Income. So you want to be able to receive income on a regular basis. We like to pay our investors quarterly. Monthly gets a little bit too hectic for our office, so quarterly works out very nice. Safer haven. You are backed by real estate as collateral. Flexible terms. So this works on investment terms for 12 months out to 10 years. And many options for you to invest through. You can use your own cash. You can use your retirement plans like 401ks and IRAs. You can invest through your company. So how does this look, investing with Kucan & Clark Partners? We actually have 2 buckets for our investors to invest through. And you can choose one or both of these buckets to invest through. In the first one, it's a 12-month term, a loan to Kucan & Clark at a fixed rate of 6 to 12%, depending on what the market is bearing at the time. We create a promissory note to you guaranteed by all of the assets the company owns and has an interest in. So we just back you with everything. And then we pay you interest, and we make these payments quarterly until the end of the 12-month term, when we pay you back your principal plus your last interest payment for that quarter. The second bucket is the 50-50 ownership on rental portfolios. So this is where we're buying cash flowing rental properties across the country. You become a 50-50 owner with Kucan & Clark on title to these properties. So you have title ownership with us. These are cash flowing properties, they're rents, but there are overhead costs for things like taxes and insurance, property maintenance, property management. We do hire property managers across the country to take care of these. So we take out these costs of operations, and then we're left with our net cash flow, which we split 50-50 with you. Typical hold periods on these are for 5 to 10 years. And then when the property is liquidated and we sell it, first from the sales proceeds, we return your principal investment, and then we'll have net profits and net equity remaining, which we also split 50-50 with you. And the way these are penciling out is during the hold period, when we're cash flowing, the portion going to you, our investor, translates to typically 5 to 6% per year on the money you put in. And then at the end, when we liquidate it and we split profits, if you divide that, say we're into this for 5 years and 15% more goes to you, divide by 5 years, that's 3% per year on top of the 6% that you were getting from the cash flow. And that translates to an internal rate of return of 9% per year on your money. Quick disclosure, these returns are estimates only. Actual returns could be greater or could be less, including total loss of investment, which I imagine total loss would somehow, the rental property would have to get wiped off the face of the earth without any insurance being in place. And of course, we use insurance. Okay, so now we're going to do this in a diagram for people that like pictures. So scenario one, with the fixed interest rate note. There's you, the lender, the passive investor. Here's us, the active operator. Okay, there's everything Kucan and Clark Partner owns and has an interest in, all of our assets. We create a note to you and we back up that note with collateral, all of our assets as collateral. We make a promise to pay you on a regular basis and then pay you back all your principal at the end of the term of the note. You fund Kucan and Clark Partners. We're paying you interest and then eventually all of your principal. So that's how that looks. A typical investment term is for 1 year on this. In scenario two, with the rentals, here we are. You're, again, the passive funding partner, and we are the active operations partner. We go into a 50-50 partnership together. We have rental property out there that we would like to buy together. You fund the partnership as the investor, and then we bring the deals and manage the deals and put in all the sweat equity. We do everything else. This rental portfolio spins off a cash flow while we hold it. That cash flow goes into the partnership. We pay off expenses, and then we split 50-50 the net cash flow. And ultimately, when this portfolio is liquidated, same thing. The money goes into the partnership. All the principal is paid back to you, our funding partner, and then we split the profits 50-50. And the typical investment terms for this is 5 to 10 years. Now, for each of these two scenarios, if you want to get more detail, please contact us after you watch this webinar, and then we can discuss it more. So once again, let's remind ourselves why it is imperative to get our money out of the traditional investments and move it to the higher yield alternative investing like private lending. Rocket fuel to your retirement plan. Which would you choose? No brainer, of course. So who do we find out there? Who do you find out there that does private lending deals with us? Well, here's some examples of people that are currently investing with us or have invested with us in the past. A couple of my favorites. One is a bus driver that's been with us for many, many years. And, you know, she started out, she invested some of her own personal savings that she had, and now she's even investing some of her retirement accounts into real estate with us. And we even have our own moms investing with us. So where do people typically find the money to invest with? Well, many might think that they don't have much to invest with, but then they're surprised to find out that they do have resources they didn't think of. And by and far, the biggest resource that people use to invest in real estate with us are self-directed retirement accounts, IRAs and 401ks. You know, a lot of folks that, you know, have a 401k, for instance, at a job, they might be transferring jobs. And what they're used to doing is when they go to the new job, they roll their old 401k into the new 401k plan at the new job with that custodian, you know, which could be like a Fidelity type account. And then it just goes back into mutual funds and currencies and the typical stuff with low yields. But what you can do is you can set up a self-directed account with a custodian that does this. And we know several that we can refer you to, and you can talk to them. And you roll your 401k into that self-directed account, and now nothing will happen. It'll just sit there until you tell them what to invest in. And so you can direct them to invest your 401k or your IRA into private lending in real estate, for instance, and make much higher returns. So another big source for folks is personal cash. And then number 3 on the list is people that have equity in their properties, and they'll take out an equity loan or some sort of line of credit. You know, let's say they are getting that at 3%. Well, then they lend it back out on private lending deals at, you know, double, triple, quadruple that, and they make a huge spread on their money. It's a phenomenal strategy for them. So let's look at if you have $100,000 to invest, okay, and you go the traditional route of making only 1 to 3% on your money. You're making $1,000 to $3,000 a year. Sucks. And you go the private lending route, and you're making $6,000 to $12,000 a year on your money. Much better. I mean, what would you choose? Pretty obvious. So what will you be saying to yourself 5, 10, 20 years from now? I wish I'd listened to Daryl and Imran, or I'm so thankful I took action with Daryl and Imran. Now, I'd like you to imagine yourself in the future, 5, 10, 20 years from now. Close your eyes and picture What will it look like when you have invested well and the passive income is rolling in every month? Can you see it? Can you feel it? Okay, now what will the future look like instead if you do not take action right now? Yikes. So let's do something now to ensure that your future retirement looks more like this. Yes? Yes. Choose to make your retirement dreams real. Again, what will you be saying to yourself 5, 10, 20 years from now? I wish I'd listened to Daryl and Imran, or I'm so thankful I took action with Daryl and Imran. Okay, so let's get you started on the right track right now. Please fill out the form that you'll find at the end of this presentation. Follow up with us, okay? Set up a follow-up meeting with us. You can call me, Imran Clark, at 858-336-5575. You can call Daryl Kucan at 760-683-4801. You can email both of us at info@kucanandclark.com. Follow up, let's get going. Thank you so much for investing your time with us today. I look forward to making it well worth your while.